Now, let's jump to our today topic, which is entry models. Let's jump to our today topic, which it is entry models. So I'll give you enough explanations, and then you'll see some of the charts. In case you get any question, feel free to unmute your mic and speak. Of course, we have decided to add this topic into our course and into our curriculum after just looking like it is something which a lot of traders, they don't have this kind of concepts. And from previously, we haven't added it into a course because it was looking like this can be a very simple concept, and it can be a very simple thing for majority of people to grab just after looking on concepts like validation, price level, concepts like psychology of the market trend. So we have different kind of entry models, and we have different kind of things we consider when looking for an entry. And here I'll jump from one thing to another. The first thing is first, the market is structure in the trend. It is one which can give you an entry. First, market is structure in the trend. It is one which can give you an entry. And first, market is structure in the trend. It is more powerful market structure compared to all these other market structures. So when I say so, I means like we can have series of highs and lows, and then we can have number of market structures like this. So you can see like you can break all these market structures, and then you can come to test on this level. And by just breaking all these kind of market structures, it is where price can become weak, and you can become very simple for price to hold on this level. Price can become very weak, and it can be very simple for a price to hold on this level. So the first market structure in a trend, it is very, very powerful market structure. And we always consider it even if we don't have a break-off structure on this level. Even if we don't have a break-off structure on this level. But then again, we highly consider this kind of market structure, mainly when it is nearly to our break-off structure, or when you don't have a break-off structure. But then again, you have this second concept, which almost aligns with this one, but it is different thing. And it is like you can have a high and low, high, low, high, low, high, and then we can have a break of a structure. And after having a break of a structure, because market is not moving in a straight line, we can have a correction, and then you can have a series of more market structures. So on this case, most of time, this price action become more strong price action compared to this one or this one. So you're going to the first market structure. But then again, majority of time, we can respect this level, but at the end of the day, still come to test on this level of break of structure. We can respect this level, but at the end of the day, we can get a movement to come and test on these levels. And it is still because we have one principle which you always say this in the community, like on the edges of the market, it is where we find whether supply or demand. On the edges of the market is where we find more potential supply or demand. So when we say edges of the market, we mean on a specific time frame which you are looking for, on highs or tops of the market and lows or bottoms of the market is where you can find more high liquidity and more high probability setups. So for that case, when you say these levels can play just for short term, and then you can come test on these levels, what you have to understand is you can get a movement to this level, and then you can have a counter trend, and then it is where you can get an impulsive move. So this impulsive move, it is where you can get a movement up to this level, and you can continue to more downside movement. And majority of time, you can consider later this as a correction. So we know that after this price action to be formed, majority of us right here, we will know that entire this movement is a correction. But you have to know that even before formation of a price. You have to know that even before formation of a price. You have to know that even before formation of entire this price action. So I just said after having this kind of price action, you have to know that our high probability level to get a trend at this level, but very high probability is not a long-term trade. So it's going to be just a short-term trade, and then you can grab more liquidity and you break on this level, and it is where we can get a movement to our entry. So this is the second thing. And then the third thing it is this one. In the market, when we have series of high, low, high, low, high, low, high, low, high, low, high, and then break of structure, majority of time, we may not find a directly move to come and test on this level. Of course, on some of the time frame it can be a direct move, but majority of time what happens is we can get a movement up to certain price level, which it is not exactly in our area of concentration, and we can start getting reversal. So on this kind of price action, which it is very common price action in the market, majority of people get it trapped and look for selling opportunity on these levels. And majority of time we can have even a break of structure on this price action. So most of us, you can think like, maybe I have already missed this trade, I have to look for confirmation on these levels. But what happened majority of time is we get this as a correction, and then you go to another impasse, we reach on these levels where it is our area of concentration in more high probability levels, and it is where we can go to a downside move. And majority of people who trade almost the same style as us, or even majority of people in community, after learning all this stuff, they get confused by this kind of price action, and they just come to say like, almost every time I just enter my trades, I'm into the right direction of the market, but I get stopped out, and it is where market comes on my buyers. How that happened? But it is simply because majority of time, before approaching these areas of concentration, we get kind of price action which can convince you to get into the market, And after being convinced to get into the market, you can get just a small movement, and then you can just break above a very strong impulsive move, come and test on these levels, and then it is where you can continue with more downside move. And it is where you can now know that entire this move is just a correction first, and you have to consider looking for impulsive phase. And another thing is, on this kind of price action, there is no way after having this movement, you will not find a break of structure. There is no way you will not find a break of structure on this level. So you have first to understand where to find a break of structure. In case you find a break of structure everywhere, you will find it. And when even you come to low time frame, you can find that you have that small market structure right here on these levels. You will find here on even low time frames. You can find it right here, and it can give you a reason to take a trade and think like it is a confirmation. But it is where you can see you get a break above, and then you continue to more downside movement. But again, on the same fact right here, we get another fact. From the same fact right here, we get another fact, which is this one. When you consider looking for a trade, whether it is selling or buying trade, just know these things. You can get very high probability setup on these levels only when you don't have a certain kind of market structure here in between. Only when you don't have a certain kind of market structure here in between. So let's take an example. We get a break of a structure, and then you get a movement, and after having a movement which have not reached on these levels, we get maybe double bottom, and after getting double bottom, it is where we start getting a move. On this kind of price action, we don't look for selling opportunity on these levels because we have not created the lower low, and it is where we can look for selling opportunity somewhere above. But in case it happens, we create a lower low, it is where we can consider looking for selling opportunity on these levels and not this one. And then again, on the same concept, in case we get a lower low, and then we don't get a retracement to these levels, we create a lower high and then lower low. We create a lower high and then lower low, and series of lows before coming back to whether area of entries or whether this first market structure. It is where even when we come back, this can act as just a short-term trend, and we can still come back to the same level to get more downside movements. I know this concept can be a little bit complicated, but when you come to look on them for a second time, third time, you can see are very simple concepts. So before we continue with more concepts, in case you have any question on this one, feel free to ask the question. Of course, I don't expect to see repeats. I expect to see, have not understood on this matter. Can you explain more so they can give more clarification?
Mr. Amisar. Hello.
Hello, brother.
Okay, thank you. Please, may you explain the last one, the last drawing?
Hey, bro.
Yes, brother.
My question is that what kind of message or indication you can know that our price is going there, the up is going up and we fall forever? Which kind of message will be provided by market?
Okay, just 1 minute, brother. I'm coming to answer your question. Just 1 minute. Okay. Brother, please repeat your question. Please repeat your question, brother.
My question is that the market will be provided the message that it will form the either first, second, third, or fourth structure. Which kind of message will be provided that now you're going to form which kind of structure? So as you can wait or super entry.
Okay. Actually, to know if the market will not pull back up to this level or not pull back up to this level, it is very hard on the market. Some of the information we can use after having the market movement. And what happened is, after having this lower low, we know that our expectation is to create a lower high, so we'll set our orders on this level. But in case we fail to create a lower high, we know that the movement can create a lower low, so we'll set again our orders maybe on this level. In case we fail to create a lower high, we can create a lower low. So from this level, we can know that there is a possibility of having a certain kind of movement, whether a movement to come and test on this level for short term and testing again on this break of structure, and then we can continue with more downside movement. Or I can say after having this kind of low, high, low, high, low, we can know that entire this movement is just a single move, and there is probability of getting more bigger correction, and that bigger correction can break all these structures.
And as an addition, this is where comes the fact of the higher the time frames, the stronger it is. So when you take these intermediate trades, let's take a picture that you're on 1 hour time frames. It'd be very hard to maybe to take your partials to shift your stop loss to the break even if they're not the right trades you have took, because within the short period of time they'll just be back into your entries. But when you have taken the same trades on maybe with the reason from maybe 4 hours time frame up to the point that we have maybe a certain correction before we have a pullback, it's a very big range for you to take your partials to shift your stop loss to the break even. We're taking a fact maybe because the market is right now, you are the one who has made a mistake, you have taken the trade at the wrong side, but at least you have taken it on a time frame that you are able to get out with profit, or to get out at least with break even, so that you can be able to notice the mistakes. And this varies. These entry models also varies with pairs. Some pairs might print this way, some pairs might not print this way, and we have like right now here it's about the break of structures. Now we can be looking on trend trading, and they have different entry models. We can be looking maybe on price reaction, they have different entry models. So this will depend so much on where you so much confident in, or what's your on your plan, what's your, or to go, we can say to go reason to take a trade, because we have speak a lot of reasons, and sometimes somebody can consider the certain trade accordingly, maybe to break of structures. You can see the same break of structure. Maybe if you go to higher time frame, you can find it as a diminution. So someone else is taking the same trade, but is looking a reason to is treating the trade as a diminution, not as a break of structure. So this also so much depends on how you're trading. I just wanted to make that addition.
Addition, it is very clear. Another question regarding these explanations. Another question regarding these explanations.
Yes, brother.
My question is concerning of that oral structure. Is those structure of the name, or you can name the structure 1, structure 2, or structure 4, or of the name?
Actually, you can name them whenever way you want. You can name them whenever you want. It's not must to have the. It's not must that you name them, like, because this is a combination of how you're seeing the charts, and there might be thousands of ways of how you're compatible the way you are trading. So yeah.
Let's continue. So something which you always consider is we can have even high, high, low, high, low, high, low, high break of structure. But in case before starting these movements, we get maybe a movement about bottom, first test, second test, and second price level. This is just a clear indication that you have tested into a very strong level. So that is why it has been respected 2 times. For in case we are coming from testing a very strong level, we should also consider having a probability of breaking even this level right here. We can consider having probability of breaking even this level right here. So it is very different thing when you see like we have a break of structure of a high, low, high, low, high, low, high break, and then you start having a correction. It is very different from having high, low, high, low, high, low break, and then movement, correction, movement. So it is very different. On this case, you can become more careful and be more sensitive when looking for opportunity on this level. It becomes a very low probability setup. But then again, we have another thing which it is very, very important when considering looking for trade, and it is this one. When you are looking for a trade and you have got lower low, lower high, lower low, then let's assume you have got a lower high, but on this lower high, we have got a certain kind of price action, and then we get the low. On this case, it is not advisable to trade on this level. It is not advisable to trade on this level. So this level most of the time become very weak levels, and for that fact, we can just trade on the levels above. So you see like you have got a correction or accumulation, or it looks like price have tested a certain price level more than 1 time. It can become very risky for you to trade on this level. Rather, you can just consider looking for a level above. So this is one of very, very important entry mode you have to understand. You can start asking yourself later on the charts, you will see a lot of things like this one into your charts. So don't even get to wonder why we have not yet respected on this level. We got the break above and then continue to be into the downtrend. It is simply because we had a certain price level right here. It is a very strong level, and we tested it several times. So now it is a weak level. For that fact, I just consider looking for a certain price level above this level. So this is one of very, very important thing you have to understand. This is one of very, very important thing you have to understand. Then I go to another thing, and it is this one.
Hey, bro.
When we have a trend, yes, brother. Yes, brother.
My question is that it is possible for the market to to create the trend line, but after we test like a double bottom, then come to sweep up and
Okay. Can we use this diagram to illustrate your explanations?
even that you can use that. I
Okay.
think the second line is that the second line is that like what the test.
So let's assume go to lower high, and then low.
Yeah.
Then yes,
I
then
think that price come to test up, come to test the
this level.
that level like a double top.
Okay.
And they come to sweep down,
Creating a lower low.
and then
Yes.
you can proceed to the up.
We mean to come test here as a trend line.
Come test there again. Again, we come to sweep to the bottom and proceed above.
Okay, it is very, very possible to get a movement to come and test on these levels. But again, what we will consider when looking for such kind of price action is, after creating a move, we should make sure that you have got the movement to create a lower low. So in case maybe it is just a movement to test on this level, and then you start getting a movement on upside, it is where we can trade, but it will be a very low probability setup. A very low probability setup by just showing that the liquid supplied on this level, it was not enough to beat the seller. I mean, to beat the buyers. It was not enough to beat the buyers. So have just come back to areas where buyers can enter aggressively into the market, and then after buyers entering aggressively into the market, they can take over. So from this point of view, in case you haven't created a low, you can evenly start a new trade. Then this can be a higher high, this can be a higher low, and then you can get a higher high. But in case you create a low, that means entire this movement will be a correction, and then this will be an impasse. And in that fact, you can get a correction even to come back test on these levels, whether we have a elimination, break of structure, first market structure of the trend, or anything else, and then you can continue to more downside movements.
Okay.
Yes.
Thank you.
Any other question?
Brother Mrisari, sorry, on that same example.
Yes, brother.
The first time when you are explaining on that part, you said you cannot take a trade. Where I don't know how to explain it. That in between there's a bit of choppy movement. You said on that part we could not take a trade. I could not understand. Yes, exactly.
Okay. Let me repeat it, brother. Let's take an example. You have created a lower low, and then you have got a lower high, and then you have created a lower low. But on this price action to create a low, sometimes you can find you have this kind of price action, and then we can get movement to create a low. So of course, this we can count as our validation price level, but it will not be a strong validation price level. It will not be a strong validation price level. So because it seems like you have reached a certain price level where you have a strong supply of liquidity, and you have tested on that level maybe more than 3 times, or 4 times, or 5 times. So in case you get a movement to come back and test on these levels, there is very high probability that this is now just a weak level, so because it has been tested several times. So in that fact, you can consider the level above. So just looking above this level, we have which other strong level. So in case maybe you have a level right here, you have diminution, inverted diminution, you have break of structure, we can consider it, and then you can get a movement up to this level, and then you can just break below. And sometimes price can be more psychological. I mean that we can have a movement, like we can reach to these levels, and then we can start having like a correction, a few candles, and then you can jump to these highs. So from this level, it is where you can continue with more downside movement.
Hey, brother.
Maybe,
Yes, brother.
On that example, I have a question.
You can ask your brother.
That if we found on chopping there's the domination, a big domination.
You mean right here?
On chopping there, the last line chopping.
Okay, you mean
that last one, you found the chopping and the domination.
Okay, so can we consider this domination? Let me show you the realistic example just here, not far. So you mean like, let's assume on price action like this one, and on this level we have a domination. So can we consider looking for selling opportunity rates here? Is that your question, brother?
Yeah.
Of course, we can consider depending on the time frame which you are in. I say depending on the time frame which you are in, simply because if this is weekly time frame, even if we don't get a strong bearish move, even just to get 2 bearish candles and then we break about 2 weeks bearish candle can be very good price movement into the market, and you can get a very good potential. But when it comes to 4 hour, 1 hour, 2 hour, 5 minutes time frame, I don't recommend taking that kind of shot.
Okay, understood.
Yes, brother. Any other question?
maybe a scenario. Yes, brother Miskari, I'd ask.
Yes,
That's
brother.
So from that choppy movement that you have drawn, because my understanding is market could move anyhow, like from that example you had shown, from that choppy movement, then the trend was downward. Does it mean we don't expect in the market, let's say from that choppy, the market could have gone upward? And what could be that scenario, if you could explain?
I mean that market could go upward.
Yes, just right after those choppy, it goes upward, not from. So from those choppy movements, it didn't come down at all. Then, let's say from there it went up.
Okay, I've got to a question. Let's take an example. You got this kind of price action, and then you got an impasse.
Yes.
Of course, we can consider entire this movement as just a correction, and then you can look for selling opportunity.
Okay.
Yes, we can consider this one as just a single correction, and we can look for selling opportunity.
Hey, brother.
Yes, brother.
I have many questions today.
It is fine.
On that station, repeat on that station that I can show something. That chopping and that once you come there up, that pullback you have the chopping, and this second you have chopping.
You mean pull back to this level?
That you have chopping, and that one above have chopping. What can you consider?
Okay. In case even on this level we have a chop price movement, of course I can consider a few things. The first thing is I can look on multiple time frame, maybe I can get more clean picture. And the second thing is I can just look even for areas above. I can look even for areas above.
Okay, proceed, Mr.
Okay. Another thing which it is also very, very important, and this happens almost every day in the market, it is this one. it is this one. Sometimes you can get this kind of price action: lower low, lower high, lower low, lower high, low, high, low. Then we can have a break of a structure, and then you can start a bearish move. So when it comes to this case, most of time we consider where is the reason for this starting of the correction. Where is the reason for this starting of the correction? So when we find that prices have ended on a certain price level where we have, let's take an example, diminution. Let's take an example. We have a diminution, and you have tested on this diminution, and it is why you have started a bearish move. We all know that diminutions are the areas where we have very high supply of liquidity. We have very high supply of liquidity. So for a reason that you have very high supply of liquidity, it is very rare to get a reverse on this level. Very, very rare to get a reverse on this level. So what can happen is we can either break below, or what can also happen is you can break by few candles. We can start the retracement to this trend trading level, or what we can do is we can have a short correction and then you can continue with more downside movements. So that is all. That is all. So you have to consider where is the starting of this your correction. In case correction we started on a certain price level where I have enough supply of liquidity, we will not expect having a reversal on this level. Okay, I see Ismail says rudia, and Silva says tunaweza uliza hata kwa Kiswahili jamani. Okay, it is in this way, brother. In case you have failed totally to ask in English, I can allow you to ask even in Kiswahili. But what you have to understand is you don't have to keep things perfect. You don't have to keep things perfect at all. So even if your English is not that good, you can use it and it will improve on the daily basis. And it is simply because we are in the world where most opportunities are provided in English. So in case you don't know English, even to speak at least 5% of English, it can be very hard, brother. And then even in the communities, we have a lot of people who are not from Tanzania and they don't know English. So in case we're not ready to speak English, just know like we are not going to collaborate and cooperate with more like 40% of the community. And even here on this market breakdown, you have a lot of people like Brother This is a brain who don't understand Kiswahili. Okay, it is in this way, brother. Let me repeat the concept. Let's take an example. You have lower low, and then you have lower high. Lower low, then lower high. Lower low, lower high, lower low. And then we got a break of structure. Let me draw it in this way so that you can get this concept more clear. Let's take an example. You have got lower low, then lower high. Low, then high. Low, high, low, high, low, high. Then you have created a low, a high, then low. And then we can get a break of structure. But after having a break of structure, you can find that they start having a correction. But when you go to either low time frame or even on the same time frame, you can find that we have a certain reason for bearish move on this level. So in case that reason found to be an area which can have a very strong supply of liquidity, an area which sellers can enter massively into a trend, that means these levels are not going to be respected. And what can happen, we can just whether have a little correction and continue with more downside movements, and then we can have maybe creation of lower low can come to this as a trend trading, and then we can even break straight to a downside. And if you have been trading this kind of break of a structure, you can have such kind of experience where you get just a one bullish candle and then the rest candles continue to a downside movement. It is because this is our correction, this is just one candle, and also it is because of testing a certain price level where we have a very high supply of liquidity. And sometimes it can be on this way. Sometimes it can be on this way. You can find that you have started a correction, but at the beginning of the correction, you have left the price reaction. So immediately after leaving the price reaction, we know that you are not going to respect you on these levels in any way. Then another thing which it is also very important to consider is sometimes you can have this kind of price action. After reaching to a certain price level, you can have a small candle and then very strong candlestick. So for this kind of case is we have a diminution and then you have a break of structure. So the question comes in mind of most of people is we are going to trade when either diminution or a break of structure. So right here we have two things. The first thing is we have to consider the general direction of the market. The first thing is we have to consider the general direction of the market. So if general direction of the market is bearish move, we can just consider looking for a trade on this diminution and not on the break of structure. So we can consider having a test on this level and you can continue to more downside movements. And I say general direction of the market simply because maybe entire this movement is just a correction phase. So in case you get the test on a certain price level from the general trend, and then you get the break of structure, even if you get the diminution, you can just test on this level and you can continue with more bullish move. So you have to consider the general direction of the markets. And the second thing, I said you have two things. The second thing is we can do confirmation trades when we are not completely sure about the general direction of the market. And when it comes to confirmation trade is immediately after having this kind of price action, even before testing on this level, we can consider this level as our main area of concentration, and then this level as our main area of concentration. In case the price will test on this level, we can take our trade and we can look for bearish move, and we can get that bearish move. So for us to know whether this bearish move is for the purpose of correcting or for the purpose of creation of lower low, we can wait for a price to approach on these levels, and we can see on the kind of price action. In case you approach on this level and then you get a bullish diminution again, this is where you can think twice. But in case you approach on this level and we get maybe a candle closure below, it is where we can hold your bearish move confidently. It is where we can hold your bearish move confidently.
Mr. Ansal,
Yes, brother.
I'm sorry. This the last candle here. The last candle you have drawn. Maybe that candle.
You mean this one?
Yeah. Maybe that candle. It's happened without the wick at the bottom. It just goes with that full body. How will you consider it?
And when we speak about candle body, I mean when we speak about closing below, we don't consider wicks. We don't consider wicks. We always consider full candle body. We always consider full candle body. So in case we get a candle body closure below this level, it is where we can say we are going to more downside movement. But in case it's just wicks, we can get wicks and we can continue to upside movement. Okay, so this is an example or illustration by using diminution, but also sometimes you can have this kind of price action. We can have high, low, high, and then you break. And you can even have a test and you can start having a correction. So majority of cases when it comes to this, will not respect on this level. See, because it seems you are coming from testing a certain price level where you have high supply of liquidity. And then again, after testing on this level, we get the first impulsive move and then you got the correction, come and test on these levels. And it is where you can go with more downside movements. And then I have another thing on this same case, and it is on this way. Sometimes you can get a break of structure, and you can see you have tested on this level. So we have got a bearish move. But when you find that, we have a reason right here for the movement. Let's take an example. It is elimination, whether a break of a structure or anything else. But we have got the candle closure above. We have got the candle closure above, and this was started respecting. That will be an indication that currently market is very strong into a bullish move. That is why you have managed to get the candle closure above, whether diminution or break of a structure or anything else. And from that level, we can respect on this one, and you can continue creating series of more highs. Any questions so far?
Brother,
Yes, brother.
that situation was the last market on GBP USD.
Yes.
So that, but my question is that I want, can you help me illustrating on real market the candle close above or below, so I can know where?
Okay, it is fine. Let's just look on this price action right here, and we can know what we mean by saying candle closure above or below. So let's take an example. This is our area of concentration. So when we say candle closure below, we just mean that to get this candle closing below, a candle below this line. So in case this full candle close below it, is we can say we have got the candle closure below. Is it clear?
You can go to low time frame, so as either 1 hour or 4 hour.
Okay, this is 4-hour time frame, brother. So example, in this 4-hour time frame, when we say candle closure below, let me show you an example in just this recently price action. Let's take an example. We say candle closure below. So here, this is good, like a break is breaking above, and then we got the candle closure below. So having just this one candle right here closing below this one, this candle, it is where we can say you are very good, the candle closure below. Yes, this one.
Okay.
Yes.
For my side, I thought that on that side where you draw the line, either the candle from that side come to close that one, that like a week.
Okay. Of course, you have this week, but candle are very closely below.
Okay, thank you.
Yes. Okay. Thank you too, brother, for your questions. In case anyone have any question before going to chat, feel free to ask. In case you have any question before going to chat, feel free to ask. In case you don't have any question, is it clear? I see Brother Busy Brain, very clear. Thank you, brother. To others, is it clear? We'll see many examples here in the chat. Let me just delete these illustrations. Just 1 minute, and then we continue. In case you want to do anything to document, you can just document. Of course, there is no need to write or draw these examples right now, so because we're going to see things late in the hour. I see from Baraka, it is clear. Isa, it is clear. Isaac, it is clear. Okay. How about others? Is it clear, guys? I just asked several times because I know how it is important for you to clarify things before we go on. Okay, let's continue. Let's continue. I want to show you first examples on this kind of price action right here. I want to show you examples on this price action right here. Let me cut the price so that it can be more clear. Example on this kind of price action. If we consider doing our analysis, we are like we are 39 right here on this meeting. Majority of people, like 10 to 20 people, they can find bullish opportunity on these levels. And even my side, I can spot bullish opportunity on this level, or even on this level of diminution right here. But what can make me take a trade or not is how the price will react. So let's take an example right here on this kind of price action. First, we got the first move which didn't reach on our entry, and then we got this kind of price action. So after this kind of price action, you just look on. We have broken this structure. This one, we have broken this one, and then this one. So it showed that this is a very strong movement. And the thing is, we just ask ourselves on where is the ending of this impulsive move, or where is the starting of this correction move, so that you can know it is the area with enough supply of liquidity or not. So we can go different time frames and see. So example right here, this 4-hour time frame, we see we have this diminution level. And we know diminutions are very, very strong levels into the market. Diminutions are very, very strong levels into the market. This one. And you know diminutions are very, very strong levels into the market. So for that factor, there is no way you can find bullish opportunity on these levels. For that factor, there is no way you can find bullish opportunities on this level. Even if we have a trend trading break of structure and diminution on the same price action. But then again, even after testing on this level, as when we got this kind of price movement, we got this as high, low, high, low, high.
Hello?
Hello.
Mr. I'm sorry.
Yes, brother.
In that place which we see diminution, the next one can we consider that is the inverted diminution?
Which one, brother?
After
This
that
one?
diminution. No, here. The left side. Yeah.
No, this is just a normal diminution, not inverted one.
Okay.
Yes. So for that fact example, even this 4-hour candle just closed below this price action. So after having a 4-hour candle below this price action right here, or below this validation price level, we can easily know that currently we are going to a bearish move. And we can evenly add this level as our point of concentration. So this is very, very important concept for you to understand, because majority of people they can try trading on these levels. Which can be very, very risky. So example, on this one, we got just a break below. It is why we got the movement. And we got the movement as you see right here. It is like we got the move to a certain price level, but we have not yet tested on this above the structure. In a way that the majority of people, they can think about looking for selling opportunity again on this level right here. Majority of people, they can still think about looking for selling opportunity on this level right here to continue with more downside movements. And they can just make an addition of that. We have tested on this level of inverted diminution, and also we have this as a price reaction. But this is actually a movement to try to come and test a price level, but you haven't reached on that level. And in case you become very aggressive and you take a trade on this first test here on inverted diminution, it is fine and it is very perfect. But in case you come to trade later, it can be very, very risky. It can be very, very risky. So in this case, as you see, we got another movement to come and test on the same price level. It is where we continue to downside. So when you go to very low time frame, you can find an opportunity on this level. And if you trade on this break of structure right here, it can be very risky because just this kind of price movement from this entry to these highs, 30 pips. So you must have 40, 50 pips, which it is very high risky, Then you can see we got this kind of price action and we came back to that level and even getting the break of structure. So what I mean by showing you all this kind of price action is right here, we got this movement to create a low and then to create a high. And then you got this series of highs and lows. But entire this price action is just a single move. Entire this price action is just a single move. So when you have an impulse, correction impulse, you have this kind of price action, we can consider entire this price action as just a single move. And that is why I said, like, in case you get low, high, low, we expect to have a test on this level. But in case you don't get a test on that level and you start creating like series of highs and lows, it is where you can know that even when you come to have a correction later, it can be a correction to break entire these areas, entire this price action. And at the time when you create a low, a high, of course, if you get a reason, you can trade on this level. In case you get a low, a high, in case you get a reason, you can trade on this level. In case you get a high, a low, you can trade on this level in case you get a reason. But you have to understand that it's just part of this single impulsive move. In case the day we start creating a correction move, it can come and break all these levels. It can come and break all these levels. So in this kind of price action, if you trade on this level, or even on this break of structure, or even on this diminution, it is totally fine. But you have to understand that this is just a single movement, and you can come to break all this price action, and you can come to test on the area above. And also, after having this kind of price action, where we got this high, low, high, this is failure to create a lower low. I explained this into my explanations. After having this kind of price action, a low, then like create a new high, and then a low, and then this movement, it is where you can just know this is failure to create a new high, a new low. This is failure to create a new low, and apart from just being a failure to create a new low, other people, they can call it the bottom or any other kind of stuff. But then again, you have this diminution, very strong diminution. So this is a clear indication for starting of new trend, as you have a high, a low, and then a new high. So in this matter, all these kind of price action we see right here, they not get respected simply because it is like you have got a very bigger correction before having movement. Let me draw by just using a rectangle. We have got this very bigger price action before having a movement. So this kind of price action shows that market have tested on certain price level several times before having this movement. And this level is not anymore valid. But as I said, when you reach on these levels, market can give you each and every reason to take a trade. So you can see example right here. We have got a test, second candle as doji candle, then small candle, and then this bearish candle. And after having all this kind of price action later on, we got this very strong candle come and test on this break of a structure, and it is where we got this more bigger move. And you can see how the price reacted, and we respected on this level, and then we created all this kind of price action. Even when looking on this kind of price action right here, it did the same thing on this one. We got this kind of movement, lower low, lower high, lower low, lower high, then lower low. But you have failed to create a true low. We have failed to create a true low. So sometimes you just even label like you have failed to create a lower low. You can just write so that you don't have to forget when you come later on your charts. So after having a failed to create a lower low, there is no way we can look for long-term selling opportunity on this level or this one. So because all these are just infrastructures. So example right here, we have got the test on this level, but very short term. And then you have got the other test on these levels of diminution, but very short term. And then we're just testing on this level of diminution. It was just a starting point to come and test on our break of structures so that you can continue a series of more highs. We can test here again on these areas of price action so that you can get a movement and come to test on this break of a structure, and you can continue with more bullish move. As you see right here, we have got a movement to come back and test on these levels, and it is where we started getting this kind of price action. I hope to see questions on this matter. I hope to see questions on this matter.
Hello, brother.
Yes, Brother Machia, welcome.
How do we know this place has high supply of liquidity or not?
Okay.
What things do we consider to know that?
Okay, very nice question. How do we know certain kind of price of high supply of liquidity or not? It's by considering two things. The first thing is time frame which you are in. High time frames are more strong compared to the low time frame. And the second thing, which it is very, very important thing, is the momentum in the candles. Momentum in the candles. Example right here. Example right here. For myself, after seeing this kind of price action, very strong candle, very strong candle, I can know that this is an area with very high supply of liquidity. I can know this is an area with very high supply of liquidity, and bearish momentum is very high into the market. So for that fact, even if we are into a bullish move, but we must have a test on these levels, and test can be even more than one test. But just considering nature of candles, nature of price action, how big are the candlestick are. So I can just consider that. But also another thing which is very, very important, when we see this kind of price action, very bigger candles, we also consider them as very high supply of liquidity when they align with our main trend. When they align with our main trends. So example right here, we see there is very high probability of having a downtrend, and we see this kind of price action in the downtrend. So even if it is not a point of reversal for more long-term downside movement, but you can have a test on this level several times before having a breakthrough, because you understand these are very strong levels.
So, brother.
Yes, brother.
In case of time frame, we should consider from 1 day as our high time frame.
Yes, in case of time frame, we should consider as from 1 day as our higher time frame. But also, one very important thing to understand is when you go to 4 hours, it is strong, but not compared to 6 hours. When you go to 6 hours, it is strong, but not compared to 12 hours. When you go 12 hours, it is strong, but not compared to 1 day. So it is in terms of comparison. As you know, when you speak about this is strong, we always consider compared to which one. So That is all.
So, Mr. Misari,
Yes, brother.
so in this market here, for you, there's no entry, or there's entry?
For this kind of price action, there's a lot of entries. But the thing is, you have to understand the price action in a way that when you execute the trade, you know exactly when you're going to exit. And when you execute the trade, you know exactly what are the probability of having which kind of market movement. Example of this kind of price action, a person can have an entry on this level, which is the level of diminution, this one. And after having an entry on this level, you can get these bigger movements. So after this bigger move, you can either close your position. As you know, first of these movements create a lower low. So if you've already created a lower low, there is a probability of having a correction. So as I said on the time of trade management, that after having this kind of impulsive move, majority of people, they cannot tolerate a correction move up to these levels and continue to a more downside. As just think like I've got this kind of price movement right here. For example, this is like 200 pips. So I know majority of people, after having a movement of 200 pips, they don't think like I can hold the movement up to pull back of maybe when you go again to 45 pips, and this way you can get more movement. So you can get these 200 pips, but then again, you can have a movement on this level, on this inverted diminution. As you know, it is a strong level, so it will not pass like any other weak levels. So you can get this movement of more than 100 pips, but also you have this level of break of structure right here. So you can do a refinement and you can take a trade of like more than 100 pips again. And we have this level right here, level of break of structure and diminution. Just from diminution up to these lows, you can take like more than 100 pips. So that is all. But taking all these kind of trades, you have to know that ending of this movement, it is where even if you are not confidently to be the ending of the movement, but at least you should have that perception of this will be my area of concentration, and in case this happen, I'll take this decision. An example right here on this price action, just after having this kind of correction, this kind of price reaction, if I'm into this trade, I can exactly know that you can come to test on this price reaction and you can get another movement which can be a bullish move. So having a test again and again and again, it was not a surprise. So you can evenly consider looking for another bullish trade and close this bearish trade. So it just depends on what kind of trader you are. Example, this kind of price action, they are just intraday trade and day trades. So you can trade them accordingly, and even myself, I trade this kind of opportunities most of time. That is all. And also, let me show this example, and then I can give you more chance to ask more questions. Example right here, you see you have this diminution, and you are coming from testing this diminution. So you tested on this level, and then you created this diminution. But after having a test right here, maybe you have taken a trade or not, we have got a movement. But on this movement, you have failed to create a new high. So after having a failure to create a new high, we can see you have tested on this, we have tested on this diminution. And after testing on this diminution, we have got this bearish move. There is no any way I can look for taking a trade on this level. There is no any way I can look for taking a trade on this level. There is no any way I can consider taking a trade on this kind of price action. It is simply because we were supposed to create a new high, and it's why I could consider taking a trade here in between. So that is all. Any other question?
So, brother.
Yes, brother.
A swing which failed to create a new high or a new low is a liquidity.
Of course. It is a place which you can consider looking for bearish move. Example in this case right here, yes. And even again on this kind of price action right here, let me show you something. Even on this kind of price action right here, it is very risky to find an opportunity. As you see, market have stayed too long on this level, meaning that you have tested on this level more than 1, 2, 3, 4, 5, 6 times. So level tend to be a very weak level. So even if you're looking for bearish move, it is not supposed to be on this level. It is supposed to be on anywhere above. So you can come to this previous price action and you can look for an opportunity. Any question regarding this example? Yes, brother.
Yes, I've seen, like you have explained a lot, that when a high fails to create a low, then there is a high possibility of creating other high, if it is possible about that. And I mean, when this a low fails to create a high, there is a possibility of creating another lower low. Maybe you can give more clarifications on that.
Okay, it is in this way, brother. Example on this price action, we know that we have tested a certain price level where you have very high supply of liquidity. So the question is, what is the purpose of supplying liquidity? What is the purpose of buyers entering on this level? The purpose is to create a new high. So in case they fail to create a new high, that means sellers are more strong compared to buyers. Or we can say in another language that you have reached a certain price level where sellers have entered massively and turned the mission of buyers become an impossible mission. So in that way, if sellers have taken control into the market, the possibility is not again to create a new high. The possibility is to create a low. And even if you're looking for creation of a high, you're not supposed to look at this kind of price action. You're supposed to look at it maybe on the same price level or even on the levels below. Well, Stephen, is it clear?
Yeah, it is clear, brother. So
okay.
when we want maybe on this low, our mission, it was to create another high, and maybe
Yes.
we have failed to create the high, so we have come to create this another low. So maybe can't we use that as a break of structure? Then we can keep on finding more bearish setups. Or it depends on the general direction of the market.
Of course, it depends on the general direction of the market. But when it comes to looking for bearish move on this kind of price action, it is very, very simple. That you have to consider this as a lower low, and then this as a lower high. Then you have to consider this as a lower low, and then this as a lower high, and then this is lower low. But then again, you have got to consider that entire this price action which we are in currently, it is just a correction phase. Entire this price action, it is just a correction phase. If you remember from the first day of top line analysis, you have looked on this kind of on this pair, and we have looked on all these kind of price action. So for that fact, you have to know that if entire this movement is the price, it is just a correction. Within correction, you have trends. So example here, we started this short-term trend. So within this short-term trend, we have got this as a low, high, low. So you can even consider looking for selling opportunity on these levels where there is high supply of liquidity. But what you have to know is that it is not long-term opportunity. You can take it, can be very short-term. You can reach a certain price where there is a high supply of liquidity, and then we can get a movement to go and test above all these structures, which are not strong structures. Actually, this one, it was not a strong structure because it is intrastructure. I mean, just a structure in between. And then this one, it was not a strong signal because it have tested on this level several times. So just consider looking for a certain level above.
Brother,
Yes, brother.
recently been recently marked the low, second low.
This one.
Yeah, the upside. Yeah, I think there's an inverted diminution. I don't think so if it has been tested.
This one. You mean this one,
That
brother?
has been, yeah. Has it been tested?
If it is this one, of course, we got this test, but Bears was more strong, so just to reject it, but later on, we got the break.
So, can you explain why? I don't understand it.
Okay, so it is in this way, brother. We started movement where we got this as lower low, lower high. Then this as lower low, lower high. Then you got as lower low. So the purpose of having a break of this diminution, it was just for the purpose of correcting. So if it is for purpose of correcting, as you know, you're coming from impulsive phase, and this was, it is in this way. This was a correction, and then you got the impulse. Then you got the correction. So the purpose of breaking this level is for purpose of correcting. And you have already reached on a certain price level where there is high supply of liquidity. So there is no way we can consider this inverted diminution, but also there is no way we can consider this a break of structure. And as I said on my illustration, in case we test on these levels, it can be very short term, and this short term we see right here. On the low time frame, it is correction. On this short term, we see right here. On the low time frame, it is correction. So just for purpose of correcting, and then you can continue with more downside movements.
Okay, thank you.
Thank you too, brother. Is it clear?
Yeah,
if it is not clear, feel free to say. You can repeat even 10 times.
I think so. That the brother, is it a price action? The action that which has been tested. I see it as a long week.
Pardon, brother. You mean this price action?
That which has been tested. Is that a price reaction? Yeah.
Of course, you can consider as a price reaction, but it's not the kind of price action which you are looking to trade simply because it is not happened on the right direction of the market, or I can say on the right price level.
Okay, thank you.
Yes, it is in this way. You have got an impulse, and then you have got the correction. You have got impulse, and then you have got correction. And on the beginning of the correction, you have a price reaction. But you know the purpose of the correction is to create, is to collect enough supply of liquidity to create a lower low. So if the purpose of the current move is to create a lower low, there is no way you can look for successfully buying opportunity on these structures. Robert says, bro, is there any possibility to take a selling opportunity with the trading levels? Yes, it is very, very possible. In case you find you have a trading levels or any reason, you can consider it taking for selling opportunity. It is very possible.
Hey, brother.
Yes, brother.
My question is that if you see the market is either going down or up, and you found the volume of candle decrease, it means that seller or buyer are going to lose the control of the market.
Yes, brother. Yes. We have learned that even on the foundation. Yes, it's very clear.
it's there after losing the market direction. If you buy losing the market direction, you can find the place to take a trade in the other direction. Or
the thing is, actually, momentum is one of the things that can show you that sellers maybe they lose it is they are but it is not a total indication for changing direction of the markets. They can lose their bar, but if the trend is downtrend, we can continue with more downside. They can gain that bar anytime. So we don't trade just momentum, and that is why we have just learned on the foundation as just something which you're supposed to understand, but you don't use it on advanced cases. Yes, brother.